Alright, so I'm gonna go over the market again today. And so what happened was yesterday I was looking for the market to pop, and everything was set up and all of that. But everything was set up to move yesterday, but instead of yesterday, it moved today because of that fundamental news. So it was timed, but I mean, you saw everything as of yesterday, and I'll go over that. So I mean, take a look at this chart on the right hand side, right? I was showing that. What is this? Right here, market's going down, hits the 190. Oh shit, what did I do? Anyway, it was against this breakout on the daily. You see the daily breakout right here? So, I mean, you don't have to be a genius to realize that if there's a daily breakout, there's going to be what? A test, right? So, I mean, just take a look at the, what are the levels in this thing? Let's go up here. Boom. Go here. So basically, right there. Okay. So it just tested yesterday, and it climaxed right here. And I showed this in yesterday's video. Climaxed right here. Then you had this change of behavior. This is the biggest volume in. It wasn't 5. It was 1, 2, 3, 4, 5. I guess it was 5. But the point here is that the volume picked up right here, meaning demand volume. Then after that, what I thought was going to happen right here is where supply diminished. You see that 5? Now 81 up, and then eventually goes down to 5. So what do you expect? It's ready to go. Why? Supply is done. Supply is done. Okay? But what they did was they just took it up to resistance and then drove it back down. And it didn't go yesterday. For whatever reason, it just didn't move yesterday, and I think it had to do with timing it with the fundamental news today. So very slick. They brought it back down, making you think that, it might break down. But as you can see, it started going down, and then again what happened? Right there. That volume died right there. When that volume is gone, and it rallied here on this change of behavior, see this? So that was the tell that they're going to reattempt to take out this high. This high here is going to get taken. It's going to, because it went and it fully tested the low of the initial automatic rally, or whatever you want to call it, sign of strength, right? And it totally, there's no volume there. So if there's no volume you can see this many times on charts, right? Here's one way to see it all the time. Do this simple back test. It's just, you don't need to do anything tough. Just look at a chart and mark every rally, and take a look at the wave right before the rally. The pullback before the rally, the first or the second pullback right before the rally. In this case, it's 10. See that? 10. And look at the rally, 35. You see the ratio is about 3.5 to 1. So this is notorious. You will see this all the time, because this is one of the characteristics of volume, in that right before a rally, you have very low volume. And if you want to double check, just take a look at any market, right? And just look at all the rallies. You see 1 rally, 2 rally, 3 rally. Just look before the rally. You will systematically see there's a volume shrinks. Over here, it's 10 before 35. This is what happens, folks. This is what happens. Why? Because this is how markets are on a springboard to mark up, because there's no more volume left, or there's no more supply left. So what happens? It goes, because all of the reaccumulation is done. Right? There's nothing more left. If there's nothing more left, that's it. It's time to go. So anyway, long story short, over here, I was expecting it to break right here after this low volume of 5. Like I said before, when you have low volume, what happens if it dries up? You get an opportunity on the long side because supply is totally diminished. And as you can see from red to red to red on these wave volumes, they've totally diminished, totally down. So it's ready to go. Supply is ready, demand's ready to go because supply is extinguished. It's gone. It's finished. It's evaporated. It's done. But what happens is that when it went to resistance, it's just not enough demand to break out. So more selling, more liquidity, more accumulation, whatever, until again, what happens? It diminishes. 10 is less than 20, 35, 13, 25, and 15. And you get a big bar confirmation here, followed by this rally, which is attracting volume. And now it's going to go. And that's what it did. Where did it go to? Very predictable area. This area right here, which is the breakdown. Very predictable. Very, very predictable. The only thing I didn't like about this trade is that it didn't occur yesterday. It occurred today. And so if you were, if you had to get out or day trading, then you just have to get out yesterday and then re-enter, or try to attempt to re-enter today. So that's what messed things up. But as you can see. And then after that, it did this shakeout, right? I have no idea what's going on here. All right. I don't know what they did, but they shook out everyone and then went up again. So, I mean, it doesn't get more manipulative than this. You can clearly see against this low, there's a clean shakeout in order to go higher. So, hopefully if you're in, you get out at the ice area right here, right, and didn't get too greedy, because if you were targeting the high, and it will get taken. If you're targeting these highs, and many times, like, I do the same thing, I target the high, but there's a, a shakeout or a pullback that will take a stop if you get too greedy. So in this case, you needed to be out right here, and you know that it's going to react. I mean, obviously you know it's going to react. Why? It's untested. Why? There's a breakdown. Why? There's a high volume over here. There's distributive action, so you know that's going to get tested right here. I bet there's an LVN right here. If above that there's an HVN, and basically it's going to serve as resistance, and it did. It went down, took the stop take, and then it went up. Whoever tried to get in the pullback got screwed, because here's the thing. When this is coming back, right, where folks are going to get in, they'll get in somewhere around here, and the stop is going to be below this wick. Look at what got targeted. The wick of this bar got targeted, as well as the low, which is another wick. The targeted, this is a shakeout. This is a stop run, and then it goes up. So there's no way to hold. If you have a stop in the market, there's no way to hold. You have to get out at those levels where a market will react, and it will react at the test of the breakouts and the breakdowns, or the HVNs, the LVNs, etc., etc. All right. So what do you learn from this? A couple of things. One, yesterday's setup of accumulation went into markup today. It didn't go yesterday. So the holding period for this was very long. All right. Second thing you learn is targeting. Targeting, if you have a clear, strong level, I'll show you over here. Take a look at this. All right. You can use whatever you want to use. If you want to quantify it based on volume, right? This LVN, this is the POC. Go take the whole thing. This is the POC. So somewhere here, you have to get out. Why? Because this whole thing is resistance area from POC all a little bit down. From this area here, or HVN or whatever, it's going to react. Somewhere there. You have to get out. Target it. So you can see all this big block of volume up here, right? So it's going to go and it's going to react in this area. It's like the sellers were there and very likely will continue to be there. So there's the distributive action. And this, by the way, was a trade too. This showed this change of behavior with the confirmation. What does that mean? That means trend has been established. So you short on the retest, and what are you targeting? You're targeting the ice and creek area. When it goes there, again they load up. And it goes, and what are you targeting? Ice and or creek area, in this case ice area. So I mean, it's not a bad strategy. A lot of times it will go higher, and you can target the highs because that's eventually where it's going to go, and you'll see it's going to take out the high. Anyway, thank you. Bye.